I think high growth Asia continues to be a really exciting place. India and Southeast Asia are markets that we're deeply committed to. But the IPO window right now is closed. And so in terms of where a lot of focus is, it's more the earlier stage tech ecosystem, where companies still have many years before they're really being impacted by that IPO window. We do think that during the course of 2023 and 2024, you're going to see some great opportunities to invest into some late stage companies. And you have to be willing to take the risk and bet on when will the IPO window reopen. Our feeling is it's probably not going to reopen for tech in 2023, maybe a little bit toward the end of 2023, but much more likely in 2024 and in 2025. So we've continued to make late stage investments. It's somewhat contrarian. There's a lot of people who are staying away from that market, but we've continued to be active across the stages from early stage to some late stage companies where we see real traction. The companies are going to be delayed from IPOing, and there's opportunities to put in capital in a pre-IPO round at favorable valuations.
Raj, China is the big prize, arguably, and when you look at a narrative like Alibaba and big tech in the Chinese context being broken up now, what does that tell you? And does that tell you that we have seen peak regulatory uncertainty and it's downhill from here? And how does it impact how you scout for targets in China?
China is still the second biggest tech market. It's a hard tech market to ignore. You went through a number of years where the Chinese government really did put a lot of pressure on big tech in China, and frankly, even on small tech in China. We feel that pressure is really easing up. I agree with the person you had on before who said that the breakup of Alibaba is partially due to just valuation and really getting better value for the parts. But to be fair, it's also due to the Chinese government exerting some control over the tech ecosystem. Now, we've continued to invest in China. We still think it's an important market, but we've stayed very narrowly focused on enterprise software and healthcare, which we think are long-term, have really great secular tailwind in the Chinese tech ecosystem. That's where our focus is going to continue to be. We've seen some positive news that Chinese companies can again get access to the US public markets. That matters to a degree. I think a lot of Chinese companies will choose to go public in Hong Kong or Shanghai, but it's a positive development that they now also have access back to the US public markets. And that should help with some liquidity that the Chinese market hasn't really seen in the past 12 to 18 months.